I'm with a very illustrious panel who's truly well poised to talk about it, because here we have an investor that is obviously making spending the money into the technology services companies. We have, which is Gabe. We have Vikram, who is a buyer. He's with Apollo, and he spends close to $9 billion.
Not me, in portfolio company.
But you're influencing them, Vikram. So, and then we also have Sandeep, who's the CEO of Persistent Systems. It's one of the fastest growing services companies that we have. And we also have Laila, who has worked with Addison as its CEO, has seen the merger with Altran and then the subsequent merger with Capg, and is now taking on a new role as the CEO of a company which is owned by Blackstone in a completely new space of MarTech, right? So if anybody in this room can talk about it, this combination, of course, has a very clear point of view on where the future of services lies. And I know we had earlier conversations saying that the services business has gone through a set of changes, and right now we've talked about the SaaSification of services, but I wanted to just bring in a level playing field and give each of them an opportunity to reset and state where they think the services industry is going to head, and what sort of trends are going to unlock opportunities and what trends are going to sort of eat away at the business, if you will. So I'm going to just start with you, Gabe. Would love to hear where you think this is going to land.
Well, first of all, thanks to the entire Zinnov team for the invitation. Huge honor to be here on stage today. Gabe Stephenson, partner at Griffin Investors, San Francisco-based private equity firm with about $10 billion under management. I'm a deal partner at Leader Investing in the technology solutions and services. So Erica, we actually, it's wrong up here, but we do lead with solutions. So I love that you said that earlier. Solutions and services group. In terms of where we think this industry is going, we are incredibly bullish on it in general. We think that there is a massive opportunity that exists today. There's been a lot of investment that has occurred, as everyone knows, at the hardware layer. And everyone's heard about the massive spending that has gone into NVIDIA and even into the model layer. We now see that application layer starting, but there is a massive last mile gap between value for customers and the application and the models that are being built. That is where tech services firms are going to come in and really solve the problem. That is, though, going to create a bifurcation of winners and losers in a way that I don't think has existed in the last 20 years of the space. There's been a lot of really strong tailwinds through digital transformation trends that have created many firms that have won consistently. We think there's going to be big winners and big losers over the next 10 to 15 to 20 years. And we obviously spend a lot of time thinking about how to invest behind, partner with businesses that are going to win, and help companies that exist win in the future.
Thank you, Gabe. Vikram, would love to hear your thoughts on it, and if you could also introduce yourself.
Yeah, Vikram Mahidhar, I'm an operating partner at Apollo. I focus on data, digital, and AI. That's my background. You can call me OG before what I did right now. Since 2008, I've been in the world of AI, building actually, what we call today the services as software. We did that, we just didn't call it at that time. I think, look, based on where I sit and what I see, I'm with Gabe on the solutions part of it. Whichever provider comes to me and says that, AI will eliminate all the needs for people, instantly I don't buy that. Having done that, been there, done that. And I'll give you an example, a real example. For 38 of our portfolio companies, we rolled out a solution around procurement that basically frees up working capital and creates purchase price parity. And what it does is uses AI to analyze invoices, analyze AP data as well as contracts and so on and so forth. It doesn't deliver value because it identified all the gaps in terms of my net payment terms and so on and so forth. Somebody has to go and recover those dollars. That's the last mile. Now, for an IT services firm or broadly services firm, the conundrum is always, well, do I become the SaaS company? Do I become the services company? It will devalue me dramatically. Where do I play? And that's where the whole human plus machine piece comes in. And I think that's where the world is going to be for a little while. And the mindset of process first, not technology first, not AI looking for a solution. I think that is going to be the winning formula.
Thank you, Vikram. Laila, would love to hear your point of view.
Sure, and you did a great job of introducing me. My name is Laila Worrell. I'm CEO of a company called Material Plus, which, believe it or not, is a marketing services company, despite the name. And before that, spent a lot of time in the engineering services industry with Arison and then after an acquisition, Altron, and then ultimately Capgemini. Maybe I'll take a little bit more macro view of the services industry, just from a perspective as a private equity advisor. I was an advisor to Blackstone immediately before taking this role with one of their portfolio companies. I serve on the board of an investment bank that does a lot of work in services, and of course I have worked in services. I think one of the things that we're very likely to see over the next few years is consolidation in this industry. There was, it was sort of a moderately growing industry before COVID, and then COVID really accelerated, especially in technology services, a lot of entrepreneurial activity, a lot of growth. And so it's great. It spurred a lot of new companies. It spurred a lot of growth in sort of growth-oriented smaller companies. And I think what we see now is a landscape that's somewhat fragmented. There are a lot of companies that serve parts of the market or that serve particular client use cases. And as companies are getting more mature, there's a lot more pressure on costs. You know, it's harder to make those procurement lists as a small company. I think it's going to force a lot of consolidation in the industry. So I think for private equity investors and also for strategic investors, there's going to be a lot of, really interesting opportunity to augment capabilities and create more end-to-end value propositions for clients, which could be very differentiating.
No. Thank you so much. In fact, Siddhant did talk about that earlier in his session, where he was just saying for the first time, strategics have sort of outperformed or outinvested private equities, right? Sandeep, thanks, Laila.
Sure. So my name is Sandeep Kalra. I'm the CEO for Persistent, and I'm very optimistic about this, as Gabe said. Look, if you look at our industry, this has given it a real good new life, because if you look at it, there was no new pivot in the last several years. Today, everyone is talking about AI, whether you're a SaaS company, whether you're a ServiceNow or you're a startup, everyone has AI. And whether 2 years back somebody had heard of Gen AI or not, everyone today is like an expert on how it can be done or not done. Having said that, look, we are in very initial innings of this. This is a longer term play. In my mind, this is not a play for short term, is it looking good, medium term, is it looking bad, whatever it is. I think for all of us, if it is a question of embracing it. The market is many different industries, many different geographies, as you said. Everyone has to find their own way. Where is your differentiation? Where do you want to play? How do you want to get good at it? AI is a tool. The competition is, do you want to embrace this tool? And do you want to compete against people who don't embrace this tool? Can you become more meaningful? For tech services companies, smaller is even better. The smaller the companies, and many of the CEOs here are small companies, whether 30, 60, 100, 200, whatever million, and we are roughly about 1.4 billion. Having grown Persistent 3 times over in the last 5 years, I can tell you this unleashes an opportunity to grow Persistent 3 times over in another 5 years. And so for smaller companies, the CEOs here, I can tell you, if you embrace this, the market is yours. You can move much faster than our peers. The biggest company from India is 650,000 plus employees. By the time they will embrace it, they will do change management in their own company, forget change management at a customer. There's a lot of opportunity. So I'll stop here, I can build on it. But in my mind, initial stages, good opportunity, AI and humans will coexist.
No, that I agree, but I think it was very interesting where you said not AI in the periphery, but AI at the core. I think Erica mentioned that earlier. And Gabe, you also said there'll be big winners and losers, right? If we have to sort of get into the brass tacks of what it will be, what does a big winner look like and what does a big loser look like?
Well, I love what Sandeep just described. And there was a term I heard recently, so this is plagiarism. I did not invent this, but SMB, small and mighty businesses. And I think Jason was touching on it earlier. There's a lot of companies out there that have they are going to fold under the gravity of their own weight of the people that exist within their business. And in the market segment that we exist in, we have the opportunity to partner with businesses that don't have that legacy overhang and can be incredibly nimble and incredibly innovative. And as we think about implementing AI into what we do, there certainly is a go-to-market in everything that we do and helping customers drive AI outcomes. And that is with our ServiceNow business, that is with our Azure business, that's with our AWS business, and certainly with our most recent investment that is a data and analytics services company across Snowflake and Databricks, et cetera. But there is also the internal use. And we've got our CEO from Kalent, a business that's growing 85% a year right now organically as a services company, over $100 million of revenue. It's pretty hard to do in a human capital-based business. They're trying to deliver projects, having 80% of those projects have some sort of automation involved in the process. That really helps scaling. I think it's a really important part. And then, of course, there's the back office functions. And I think there was a comment earlier about just eating your own dog food. And we do really push our companies to do that and to put themselves in a place of an advantaged cost structure through automation and through AI. So I think there's those types of business models are going to win, and companies that have models that either can't get there or leaders who are resistant to get there are in a bit of trouble.
I think that's a great point, and I'm going to take a segue from there, right? I just recently read an article that said for the first time, it's by Russell Reynolds, and they said that for the first time in 5 years, the CEO's belief in its executive leadership team has dipped 20 points. Right, so they don't believe their executive leadership team is as ready to make the changes and drive AI as the rest of the team. And in fact, in reverse, even the middle management felt the executive team were the blockers, if you will, of this adoption of putting AI at the core. In that context, Laila, because you've just taken the helm off this business, what are you doing? How are you thinking of it? And how are you addressing some of these blockers and issues?
Yeah, I was joking with Nitika that we should ask the executive teams how many of them have confidence in their CEOs. That's another good question. I think AI adoption, I think it really depends on the size of the company, the stage in its growth. I think you were getting at that, Gabe. It's a lot easier for smaller companies to adopt the ways that they work, their processes, their value propositions to incorporate AI models than it is for large companies. It's just much more complicated. And I don't think it's understanding, my experience at least so far is I don't think it's understanding the technology or understanding the possibilities the technology offers. I think it is the sheer blocking and tackling of figuring out how to change the way that things have been done, which, there's a lot of complexity to doing it. There are a lot of pieces in the chain that need to change. So I think that's the piece that people are having a hard time figuring out. I think Material Plus, we're going through this journey now too. I think we're fortunate to be on the more nimble side, but it is really complex when you have multiple service offerings to figure out also how to price it. Because actually, clients people are tangible things that you can attach a rate card to. You understand how to price. You understand you've got a historical experience communicating that pricing to clients. And when you tell clients you're delivering things through technology, they're not always, they're pretty savvy. I mean, they're not always willing to pay for that. They know that you're paying a lot less for that. So I think those are the things that are hard for executive teams to figure out. I don't find a lot of change resistance. I find a lot of how do we manage the complexity of implementation?
The maneuvering of this. Sandeep, I mean, you're probably good crossing the value chasm yourself.
Yeah.
You probably have more of this problem.
Sure. So I'll first go back to the earlier point, the winners and the losers.
Yes.
I don't think it's going to be a few winners and a few losers. There are going to be many, many winners. So for example, if I look at the tech services industry itself, not every company is made the same. So for example, if we look at Persistent, 40% of our work is ISVs, 60% plus of our work is doing tech work. Then the rest, 40% is between, let's say data, AI is roughly 20-25% of our work. Then there are CX platforms like Salesforce, ServiceNow, others, where we are working. So if you look at the way we are pivoting, we are building a platform for the software development lifecycle, the disruption on that. We are bifurcating the company into some people who will build the platform. Let's say there is a R&D team which is building a platform. We are today 24,000 people, 500 people are working different parts of the platform. One for AI for tech, one AI for business. Some of it is our IP, some of it is built on partner IP, on top of a ServiceNow, on top of a Microsoft, whatever else. Now, if you look at all this journey, we have started to win in a focused way. One of the bigger private equity folks is here. We work with their portfolio company, and this is disrupting the entire SDLC, not just code development. So everyone has to find their niche. You find that, you rinse and repeat, you get specialized. Then you look at business models, to your point, outcome-based, as you talked about, and so on. So this is a big journey. And in this journey, everyone has to reinvent. If we are reinventing what we do, how does the organization look like? In a typical tech services, it used to be a pyramid, bring in people from junior, whatever else. All of that is ripe for disruption, but it's not happening tomorrow. People have to adopt. It'll be a longer term journey, and so do the management teams. There are people in management teams who will have to unlearn and learn, not just us. So I was with the CIO of one of the leading healthcare companies, and what she is doing is she's tied up with one of the leading universities here in the US, in the Bay Area, and they are sending first top 30 right from the CEO down to a boot camp to understand what AI is all about, so that they can at least have the common language. Today, everyone says they understand AI, but they don't. So there's a lot of reinvention right from our business to management teams, and we'll all have to figure out our own ways.
Got it. Vikram, I'm going to pick it up from there where he said there's still time, right? Sandeep alluded to the fact that it's not happening just right now, but there's still a little bit of leeway. You have to do it on an accelerated front and with all your portfolio companies. So is there leeway, and how are you getting that done quickly, the change in mindset?
Yeah, and deliver outcome, right?
Exactly, right? So the mindset without outcome is pointless.
So there's not a huge runway. Look, I think it all boils down to talent. I'm
going to put you in a spot, like what kind of talent, right? And how do you build that mindset?
I'll give you tangible examples there. I was with one of our businesses, about 300 million in revenue, and they have been doing machine learning for the last 20 years. And they're very proud of it, and but they build knowledge graphs using humans. I'm like, okay, that's 20-year-old thing. What are you doing today? And we're experimenting here, we're experimenting there, and this is their kind of executive team. I looked around and I said, no offense, how many 20-year-olds do you have in your company? And how many of those are given the task to really go and automate? The answer was not great, right? So one of the things that I'm really pushing our portfolio companies to do is really hire younger talent that is able to deliver. That's number one. Number two, the services providers that we are working with, in the last 1 year, actually, fixed fee bids have gone up dramatically. Services firms have become a lot more confident because they are using AI in some shape or form, and they're saying, I'm willing to do value at risk, which is fantastic for us, right? Now, I do want to get under the hood and see, are you really passing on the buck to me or not, whatnot. But look, at the end of the day, if you are delivering outcome to me, which goes back to, solution-oriented mindset, I'm good with it, right? Because nobody's going to give me a complete solution out of the box anyway. So to me, a combination of that talent and just this whole outcome-based mindset, I think will get us there.
Got it. No, I think that's a great point. Thank you so much for that. One thing that we talked about is obviously there's a lot to maneuver, and Laila, especially because you're new at it. How does one or a CEO in this room sort of prioritize what needs to be looked at first? Because there's just a lot to do, and it's moving at a velocity that nobody has even anticipated, right? We always see history from the sidelines. In this case, that we're probably smack dab in the middle of it. That's how quickly it's changing. So in this case, what should the leaders here think about when they're ruthlessly prioritizing what they need to do as they grow?
I think sometimes your clients tell you, They help you set priorities because you hear a lot of themes from clients, and it helps you understand what the market is, what opportunity they see, where they see the value. I think everybody needs to. AI is not new. AI has been around for a long time, and especially in our industry, the wave of technology changes happen so rapidly. So I think you do need to accustom to really push your team to constantly reimagine the services that you're offering and how technology will disrupt those, and how to stay on the front end of the disruption curve as opposed to being disrupted. So I'm not sure there's a standard generic answer, but I think being able to stay a little bit ahead of the curve to help lead your clients through innovation, as opposed to having your clients tell you, that you need to innovate, is super important, and just constantly reimagining services.
Gabe, I'm going to ask you this question, right? When you're investing in companies, what are you looking at? Like from an investor's lens, what makes a difference? How do you know that this company is not just noise?
So, we are looking for companies that have the right slope and the right potential in the long term versus where they are today. And I think that's even more important in the rapidly changing environment that exists today. And I go back to really three things in helping to determine that. The first is going to be the business model. And the business model is a little bit on the capabilities that exist within the business. It's a little bit based on where they're playing. I think vertical specialization is more important than ever. So it's sort of all the different components of what the business model is. The second is the culture. And I think, and I mentioned this earlier, I think more than ever, you need a culture that can evolve rapidly. And I give credit to our organizations. And again, I go back and I reference Kalen's really fast organic growth right now. It's a culture that moves really fast and innovates and is not scared to break things. It's very important. And so I think culturally that's important. And the last, and I can say this because I have two of our CEOs in the room, you need to have the right CEO. And it goes back to somebody who, to think about the question that Laila just answered, if you were in that seat, you need somebody who's studying this and really, really immersing themselves and getting educated around everything that is here, that is coming, and understands what is going to be important in the future. And you need somebody who's very open to going down back to first principles in their business model and continually look at that and build that back up. And so we had a great board meeting yesterday with New Rocket, our ServiceNow business, and I couldn't agree more with what Jason said in the business, and the strategy that we set out and envisioned when we put that together in 2021 is not what is going to win for us today. And so, congratulations. And Mike acted like we're competitors. I actually think of Mike as number one, just somebody I admire a ton and somebody who I root for. Because when you have successes like you did with Third Air, I think it's great for all of us. And for us, I think we just need to continue to reinvent our business model. And so you want CEOs who are going to do that. And we have that. And I think those are some of the components that we're looking for in businesses that we're evaluating.
I think that's a great point. Vikram, I'd like to ask you, obviously you work with multiple CEOs, right? What is the skill bank that they have? What do you see as a common pattern of successful CEOs versus not so successful CEOs? And if there's anything that the folks in this room could learn from that?
Yeah, look, obviously people who are learning and embracing, every single day, ruthless prioritization is very important. Are they really prioritizing it? And not only that, are they giving room to their management team to go learn and also coach them on how to ruthlessly prioritize? Those CEOs are definitely in the sort of top quadrant, if you may. And then second thing, as I mentioned, CEOs who are investing in talent, in really challenging, we have one of the companies, I can't name names, but I sat down with the CEO a year and a half ago rather, and I said, why do you need 4,176 people? Why can't you do this with, literally that was a number, why can't you do this with 1,500 people? And here is how I'm thinking about it. Obviously, there was a lot of resistance, you investors, you need your money, all that. A year later, we executed a few things, And literally yesterday, I had dinner with their management team, and we spent a whole day going through sort of what next looks like. And that was the question that the CEO put on the board. How can we run this business with 1,500 people? And how can we reimagine our processes? That's a successful CEO.
So I think business model seems to really be at the heart of it. So Sandeep, I'm going to ask you, you're probably in the stage where you have a large chunk of people. We're saying, I think Sam Altman mentioned that we may soon have a one-man unicorn. We're talking about shaving like to 1/3 of the numbers in order to deliver as much, if not more. So when you are looking at business model, not just like, fixed fee bids plus, outcome-based models, you're looking at reducing the work, not necessarily reducing, but rationalizing, if you will, the number of people. So how are you thinking of business model and solving for it at scale?
Yeah, so essentially it's basically doing more with the same. I wouldn't say it's rationalizing and letting go of the people. See, the way we are looking at it is this. We started saying about 3-4 quarters back, we are a public company. You can pick up our earnings call material. We started saying we want to be, with the advent of this generative AI, the way we are looking at it, there is an opportunity for us to be a platform-driven company, which is basically underlying the platform are different AI services. What it does is basically, as I said before, take out a certain set of people, they're building a platform. Rest part of the company is taking that platform, customizing it by the domain or by the service line they represent. Both of them are capable on the AI side or infusing AI and other capabilities. One is creating, one is using, and using it to the customer's leverage. Now, by doing this, I can say with confidence down the line, and even today, in certain areas, for example, we specialize in product development. So in the product development side of it, we have been able to go prove to our private equity customers, portfolio companies, because not every product is like necessarily the latest, greatest, whatever it is. If they could reduce cost on their, mid to late stage products today, invest in the future, they will do it hand over fist. We've been able to do that at 70% of the cost by using technologies. We have been able to break the linkage of revenue to headcount growth. Last 4 quarters, if you look at Persistent, we have grown at $60 million or more. Last 3 quarters, and our headcount has hardly grown. So we have been able to take technology, create a platform, and as I said, one of the biggest win is with one of the portfolio companies of a PE right here in this room. So we are looking at more and more platformization, and more that would mean the people will change, the number of people required to do the work will change. But in my mind, if I was to take a bet, overall work, the addressable market will also improve. So that's the way we are looking at it. And again, if we can do it, if we can solve for Persistent first, world hunger will take care of itself. And there are so many people. We are just 24,000 people in the company. There are so many companies much bigger than us. We can happily go grow.
I'm going to open it up. Thank you, Sandeep. I'm going to open it up to the audience for questions. Does anybody have a question for these? Somebody's hands up.
Manish.
I'm a CEO of a tech company, and I know I'm very glad to hear that the future of services is very bright. But we don't live in the future, we live in the present. And the fact of the matter is that for the last 2 years, the IT services sector has grown at less than 4%. You adjust it for inflation, and this number comes down to 1.25%. All right. Then you attend, I attend all these conferences on generative AI. They keep telling me that, I will half my workforce because all the coding will be done by someone else. All these agents will be taking up the jobs and everything. So, in light of all these here and now, how do you really say that the future of IT services is bright? What is the data point that you guys are putting in front of us? And I don't see valuations coming down of the assets. So yeah. just want to get your perspective on here and now versus future.
Yeah, so valuations I'll leave to the PE guys here, but I'll just make one comment on the valuations. The valuations are depending on which market you're looking at. If you look at today, EPAM, Globant, Endava, look at the market valuation for those companies. versus the companies that are listed in a different, world like an India of this world, the multiples are very different, valuations are very different, valuations for different capabilities are different, but I'll let the valuation question be with the PE friends because they are experts. Now, in terms of IT services market, let me put it this way. There are going to be winners, there are going to be losers. Every industry, every moment. Last 4 years, if I was to just give you persistent data points, we have grown at 24% CAGR. Our last 4, if I look at the last 8 quarters, CQGR is 3.8%. Last 16 quarters, CQGR is 6%. There are many companies like us. We are not necessarily the only company growing at that. And there are companies who are not growing. So you, as long as you can differentiate, as long as you have something different to give to the market may still be stagnant or grow at a certain pace, you will grow. So I would rather look at, solving our company's problems than the universe problems. Universe takes care of itself. Now, the data points on the market growth, I'm sure the TAM for ServiceNow, as Erika said, so I'm sure ServiceNow is going to grow, right? If ServiceNow is going to grow, and if we look at the longer term, God only knows whether ServiceNow will do services also or some services company will do service as software. But right now, for every $1 of ServiceNow sold, is there multiple of services? 3 to 4. So all the more power to you, Erika. You have to grow. We all have to grow. Right? Similarly, if I go to Salesforce, if I go to any of other things, if you look at the speech from any of them, they all want to grow. For every one of their growth happening, while the entire discussion is about the work coming down, I do think if we pivot in the right way, our companies on the capabilities that we are core to will grow, and rest the things will take care. I hope I answered you. I don't want to get scared. Look. In Hindi, they say, and I'll convert that to English, Jo dar gaya, wo mar gaya. What it means is anyone who's scared will die. So, man, be optimistic.
I'll give it a positive spin. Fortune favors the brave.
Yeah.
Let me
I'm not doing murderous things.
Let me piggyback on the back of that. 3 things to say. Just on the last comment, which I really agree with. We have an executive chairman who talks a lot about, and look, I think the macro matters more the larger you are. And so we have an executive chairman who loves to tell our management teams that they cannot make macro an excuse. And so I just want to start there because I do think that in companies of a certain scale, there's tremendous opportunity in this space right now in today's market. And I think you do need to be in the right markets. It is why we pick ServiceNow. It is why we pick the data space. I think data is obviously incredibly attractive. And if you pick apart data, I think there's areas within the data and analytics space that are far more attractive than other areas within data and analytics. I think there was a pretty nice graph earlier which mapped out some of those areas that are really, really exciting right now. So I think there is tremendous opportunity in today's market. Last point I was going to make is just on the valuations. If we're talking about us investing in your business, I think that valuations have come down meaningfully in the last few years. If I'm talking to Tim Crowhurst about selling one of our businesses to Cognizant, I think valuations are still sky high. So I could see it either way. I can make the argument both ways. So appreciate that.
There's one other aspect that will give you from buyer standpoint. There is no differentiation amongst GSIs because of the scale at which they have grown. But if you have focus, you have tremendous amount of potential to grow. And that's how we are buying, by the way, that we are giving more and more businesses to focus companies who are coming in and showing the expertise.
So I'll just add one thing. GSIs have become GPSIs, general purpose services companies, right? So from that perspective, that's where the opportunity, especially for the smaller firms here, and I consider Persistent also to be a smaller firm. There's a huge amount of opportunity for us. If we can be focused in where we want to play, we will have the seat to the table and right to win. And I'm not just saying it in the air. It's proven. You look at our own journey. Last 19 quarters, we've sequentially grown. At a services company, for a $1.4 billion company, our market cap is $10 billion. So hope is there. Optimism is there. I think we just need to find our own right places.
Laila, do you want to add?
Sure. I'll just be brief because I think everybody covered it really well. But I really appreciate the question because it really has been a roller coaster in services and technology services. Like there was a huge run up during COVID, right after COVID, and then everything really slowed down. And I do think the points about what sector you're in really matter. I mean, one of the reasons I loved Aricent when I was at Accenture for almost 20 years, for 17 years. That's a really big company, and in enterprise technology, which is a much more mature industry. Then I went to Aricent, which was product engineering with a very strong domain focus, and we had been growing really strong, like way more than Accenture. I think having that, domain expertise in a company, in an industry that's a little bit earlier in its maturity curve, that's always going to be where the growth happens. I think industries just by nature mature at some point, and there's more competition, it puts pressure on growth. So I think finding that, those areas of domain specialization are super important, and it matters kind of what sector of the industry you're in.
Thank you. I think, Erica, you brought it up, right? I think you said domain, you talked about verticals, and then is what you said. Great. Is there any other question from the audience in the room? Oh, yeah. Ari, yes. Sorry. Up front. Let's.
So what's the advice, the time the CEO spend, what kind of, with clients, employees, investors, how is it changing as the market changes?
So whenever there's a pivot, like the pivot we are seeing right now, it's very important to be spending time in the field, whether it is with your customers, whether it's with your partners, whether it's even with the startup world. Because see, you as let's say as Persistent, we only have this much amount of dollars we can invest. We can create a small wave, but the bigger wave that is being created by the ServiceNows of this world, the Salesforce of this world, the Microsoft, Google, if we understand that, and if we are ahead of the curve, like partners, like the companies that have been built, that is where the thing is. And at the end of the day, all of this is in the service of the customer. The more we understand the customer's problem statement, the more we are able to bring innovative solutions, differentiated solutions, not just order takers. That's where it is. So it's very important in times like this to spend more time in the field.
So I'm just going to ask a question on this, right? You say understanding your customers' pain points, but when we speak to CIOs and CTOs in large enterprises, they've only been able to get a 15 to 20% productivity uplift. They seem to be struggling with really getting the ROI out of AI. So when you as partners go into those systems, how do you really solve for that dichotomy? Maybe are they really ready to take what you have to offer?
They may not necessarily be ready to take what we have to offer, but look, the customer knows what is their problem statement, and the customer also knows what the solution statement is. I'm telling you very sincerely, if you go to a customer, you talk to them, you debate with them, you can bring various points of views, but it is jointly built. And whenever there's a hype curve, this is what is going to happen. People in the boardrooms will tell their management teams, okay, we've heard a lot about this generative AI, what are you doing? And there runs the business to the CIO, everyone, and does the proof of concept. Not necessarily big value, but they showed something to the board. Then slowly the next step of the journey comes in. Today, and somebody, I think, Gabe, you made that point, Persistent is growing at 20% year on year. Our data business is growing 2.5 times that. Because for people to really have the agentic AI frameworks, if they're not using a ServiceNow and do it natively with their systems of record, they're not necessarily harmonized. They can't speak to each other. So it's a journey. And so you have to discover it with your customers. And again, you may start somewhere. It may lead you somewhere else, but that's the journey. And that's the business, and that's a value discovery.
Got it. You wanted to say something, Vikram?
No, I think you have a valid point. When I look across all our entire portfolio, I do think that the technology leadership is a little bit stuck. And I would put them in two buckets. One bucket is the ones who are a little bit more hungry to learn and trying to sort of, take the grow side of their budget, this run side and grow side, the grow side of the budget, and even experiment a little bit with the run side of the budget. Okay? But they all need to be educated. So one of the key things that I do sitting in my seat is I push them hard, but then I also bring in a lot of education to them. Said, just take some time out, go talk to some startups, go talk to some, focus providers and see if that opens up your mind. And generally I see an impact there.
Do you want to add anything, Gabe, Laila? Just checking.
to go back to the original question, just orientation of CEOs, I think there's different stages of any business's maturity level and where the CEO should spend time or can spend time. And, there's obviously different personalities of different CEOs. And you can look at some of the most successful software CEOs that have ever existed, just to choose some that we all know of. And Frank Slootman, probably fairly internally focused, execution oriented. CEO versus, the counter would be obviously Bill McDermott, and probably the greatest externally focused CEO that we've seen in quite some time. And so I think that there's different ways. We love our CEOs being externally focused. I think that is the best use of their time, all else being equal, but not all else is always equal. So, but I think that the more that they can get out, spend time with the customers, they can really influence customer conviction at a different level than technical conversations can at times.
I'll just add to that. I think it's a great question, Pari, and I loved what you said, Gabe, because you were asking Pari about like how much time do you spend managing each of these stakeholders, and I think the best investors are the ones who think the way that Gabe does, that really try to be careful what they ask of the management team and really notice when the management team is spending too much time managing the investor as opposed to being out in the market. So I think that is a great orientation. And I will say in services, like, two things really matter: your relationships with clients and your relationships with your team. Services is right now all about people. Yes, we're productizing it, but still, it's services, it's about people. And so your team needs to understand that you are spending time with customers. I think the quickest way to lose a team's confidence is when they know more about the customers than the CEO does. That is a non-starter. You got to be smarter about customers than your team is. To do that, you got to be out in the market. And so I think that's really, really important. And not just selling what's on the truck. That's a phrase that I've heard a lot, like not here, but selling what we already do. I think the best way to spend time in the market is to really understand what clients' business challenges are and how they translate to capabilities that you might either have or be able to build. Because some of the best ways, clients have problems that you're not always equipped to solve. Can you figure out how to solve them with the capabilities that you have? Sometimes that's where real innovation comes from. So I think it's a really good question. And Gabe, you'd be a great investor for me.
Appreciate that.
Gabe's just smiling. He's saying, yes, I'll give you a check separately. No, I'm just kidding. But I'm going to wrap up this panel, but I'm going to ask each of you, like, your one takeaway or your one piece of advice to the set of audience that we have. Like I mentioned, we have investors in the room, we have services CEOs in the room. So what is your, the most important piece of advice to services CEO and to the investors who are looking to invest in these CEOs?
For the services CEO, it's basically the focus. Figure out your focus and just go absolutely with intensity after that. If you can do that, you will find out your way. For the investors, obviously, their whole thing is, as he said, when he's buying the right asset, right market, right price. I don't think I have an advice. They are better off than me on that.
Laila, what about you?
Well, I would have said what Sandeep said, so I'll say something different, which I think is just remember this is a people business, and you got to over communicate to your people. They need to know what direction you're headed in. It is a really turbulent market. It really is. You've got a great growth story. A lot of services companies, though, it's been a very bumpy ride. And you've got to really make sure that people understand what direction you're headed, make sure that they are, resilient when you don't get the results that you want, that they're looking forward and figuring out how to solve for things, that you're keeping teams motivated.
Thank you.
So I think my advice to CEOs and investors would probably be the same. In given the premise that this is very early in a very transformative era, I think you need to stay very curious and continue to educate yourself and stay very nimble. And if you do those two things, it's a pretty powerful combination.
Yeah, the final thing I would say is that don't be afraid to pivot. You will have, I think in the next 5 years, many successful companies will pivot multiple times. The question is, how do you build the culture and capability to pivot?
Great. So I think we got focus, nimble, culture, and people, even though we're trying to say that there may not be as many people in the mix eventually. Thank you all for a wonderful session. May we have a big round of applause for them, ladies and gentlemen.